the advance and decline ratio. But let's also put the spotlight on some of the earning candidates, and let's talk about Syngene, because this time the earnings were not that bad, but the management commentary is not that great indeed, because they have highlighted in their press release some concerns on the profit as well as margins, that there could be a decline on a YY basis. But what could be the reason for that? Let's find an answer to that. We are being joined by Peter Bains, MD and CEO of Syngene International. Hi Peter, good to be speaking with you. Very good afternoon, and thank you so much for your time. Firstly, when I look at your quarterly revenues, Peter, from operations, that has crossed that 1,000 crore mark for the first time. So congratulations for that. But help us understand that, are we in to see this run rate continue in the upcoming years as well?
Right. Well, we're obviously very pleased with the Q4 results and the 1,000 crore quarterly threshold being crossed. That sets a new benchmark for us on a quarter basis. Of course, the business has a seasonality pattern to it, and we will be expecting growth through 26. But that will follow a seasonal pattern as well. But it's good to leave fiscal 25 with that kind of momentum.
Right. Mr. Bains, also this year the company's revenue growth was 4%. What gives you the confidence of an early teen growth in FY26?
Yeah, I mean, I think what we're seeing is a pipeline build that's broad-based across all three of the major platforms of our business. So we're carrying forward a lot of momentum in the large molecule manufacturing, and we expect that, which grew over 20% in fiscal 25, to flow through into 26. In discovery services, we see a strong pipeline build. One area where we're seeing that is the flow of pilot studies coming out of rebalancing of supply chains in our customer base, China plus one. And we've seen in fiscal 25, a high level of conversion of those pilots into full-grown programs, and we expect to see that momentum continue into 26. And on small molecules, again, it's been a challenging year in 2025. But again, in the second half of the year, we've seen a number of programs and pilots come our way, and we would expect that to be expressed in an increased utilization in our small manufacturing facilities. So we have broad-based confidence and visibility in pipeline and flow through of business, which underpins our expectation that the underlying business in fiscal 26 will be in the early teens.
But Peter, when I look at your numbers and especially the kind of seasonality, so the first half was not that great. So how much improvement has been there in terms of the market dynamics, particularly in the US biotech sector? Help us understand more on this front.
Sure. So as we had, I think, guided, we expected the first half of fiscal 25 to be relatively muted, and then we expected the second half to pick up and show growth. And that picture has played through very consistently. We saw growth in Q3, and we've seen further growth in Q4, and that has been both comparative and sequential. So the growth of Q4 over Q3 in fiscal 25 was 8%. So good to see that sequential growth. Now, the external market environment remains dynamic and remains uncertain, and one of the key factors that played into the relatively muted first half performance was the flow of venture capital financing in biotech in the US. We've seen that start to pick up, but it's remained uncertain, where that will finish, and we will have to navigate, a number of uncertainties in the dynamic macro environment. But again, as I've described, we remain confident that we have broad-based opportunity and potential across our discovery services and our manufacturing services. And we factored in the uncertainties in our thinking in the macro environment. And, we believe that our underlying business will grow in that early teens rate in 26.
Right. Also, in your research division, what kind of pilot programs and conversations are you looking at for FY26?
These pilot studies are very important. I mean, this is an opportunity for us to work with, with customers and for them to understand the capabilities of the Syngene teams here. They will generally start in areas like PK, PD, process development, and they will understand our capabilities. And if they like what they see, those can convert from pilot studies into full-grown programs. And of course, that means a scale up in the nature of the business. And in fiscal 25, we've been very encouraged by the high conversion rate that we're seeing in these pilot studies. We've built a pipeline that will flow in through into 26, and we're looking at the same kind of high conversion rate to underpin our confidence in 26.
All right, Peter, also if you can help us with the update on the Stelis facility, how are we in to see the operations starting in from this new facility of yours?
Sure. So this is the large molecule facility in Bangalore, so Syngene's large molecule Unit 3 facility. And, we've now essentially completed, I think, the integration of that and the qualification of the facility. We would expect in fiscal 26 to start to see that operational, and for that to begin in H1 and then build up in H2 and flow through into fiscal 27. So we're just about ready now. We'd expect in H1 to start to see operations play through, and for that to pick up in the second half of the year.
Right, Mr. Bains, also US FDA had conducted a pre-approval and CGMP inspection covering the commercial manufacturing activities for the US market at the Bengaluru facility in February 2025. Now, on conclusion of the inspection, the US FDA had issued Form 483 with 5 observations. Until when can we expect this facility to get cleared?
Yes, so I mean, this of course is something that Syngene's very used to. We routinely get these investigations and have an outstanding track record in quality there. So this inspection, we got 5 observations. These observations were very largely procedural in nature. We fulfilled all the obligations of responses in terms of CAPAs to the agency. That process is running smoothly, and we would expect to get clarification on the outcome of the CAPAs in the coming weeks. So we'll know, I think in the next 2 to 4 weeks what the outcome of that is, but we have high confidence that will complete satisfactorily.
All right, Peter, but also help us understand that going ahead, how much revenue are we in to drive or generate from the new biologics manufacturing facility in US?
So this is a very strategic acquisition by Syngene. We are through this acquisition, we are increasing our large molecule capacity in Syngene to 50,000 liters. And of course, we are establishing a strategic foothold in the important United States market. We see the large molecule manufacturing opportunity as a key pillar of growth for Syngene going forward in the medium and longer term. The large molecule component of the global CRDMO market is the fastest growing, double digit at 12%. And we have significant strengths and capabilities in monoclonal antibody design, development, and manufacturing. So it's a very strategic acquisition for us in expanding our geographic as well as our capacity and capabilities in large molecules. In terms of where can that take us, it clearly provides significant headroom for growth, and along with our biologics facility in Unit 3, our Mangalore facility, and now with the facility in Baltimore in the United States, we're very well placed to play into this exciting market opportunity.
Right, Mr. Bains, also the impact of tariff on pharma market and your company, especially on the CDMO market, do give some color on that as well.
Right. So, I mean, I think the first thing to say here is it's a dynamic and uncertain outlook in terms of tariffs. What we've seen in the last few months has not been consistent, and speculation about where this will land, is something that we're seeking to avoid. So wherever it comes out, I think we've thought through this, and we don't see this having any sort of material impact to Syngene's outlook on its business going forward. We believe that we will be able to manage whatever that outcome is very well, and that it is unlikely to have any material impact on our business.
All right, Peter, we let you go on that note. Thank you so much for taking the time out and speaking with us and sharing your outlook when it comes to the earnings for Syngene. But for now, the markets are disappointed with the commentary as well as the earnings, and the stock is down almost 13%. But with this, viewers, it's now time once again to slip into a very short break.